Good morning, folks, and welcome to another day of the Daily Read with Jeff Kikel. This is our weekly wrap up for the week of August 3rd through the 7th. And let me just tell you, the last 2 weeks of running this show have been the two craziest weeks I think I've seen in the market in 2 years. We have seen stem to stern, back and forth, all kinds of craziness going on, leading up to today's jobs number, which has been the big thing we've been talking about for literally 2 weeks now. So, what was the number? Let's get started with that. Last week, I told you the market was telling two opposite stories, and this week's jobs report would decide which one was real. The number landed this morning, and it was shockingly weak. The economy actually lost jobs last month, so the market rallied. If that sounds backwards, stick with me because that's the whole story of this week. So, first off, let's talk a little bit about our weekly scorecard. Here's how it's built. Coming in, the market was near record highs, but nervous, waiting for Friday's number. Midweek, we got a genuine warning sign. The AI trade started getting sold on good news. Western Digital reported earnings that grew 109 and beat on every single line. The stock then fell 15% right out of the gate. SanDisk beat and dropped 11. Datadog beat and lost 17. When great news can't lift a stock, it means everyone who wanted in is already in, and that's an exhausted trade. Meanwhile, the boring, steady names, soda companies like Coca-Cola, power utilities, they quietly just kept slowly eking upwards. Then came Friday. Now, the July report didn't just miss, it showed the economy shed 23,000 jobs. Now, when forecasters expected a gain of nearly 90,000, this also tells me that at some point in life, if I am reincarnated, I want to come back as either a weather person, a stock analyst, or an economist because you can be completely wrong at your job and keep it. Unemployment ticked up to a 4.1%. On paper, that's a bad number, but the market read it one way and one way only. The Fed will have to cut rates. There was a 57% chance as of yesterday in the betting market that the Fed was going to raise rates, which would literally be complete insanity at this point. And rate sensitive names took off. Altasian, which is a big software company, Cloudflare, Altasian was up 22% today, Cloudflare up 16, Twilio up 17. Bad news became good news, and the NASDAQ closed the week at near highs. So, what do we learn from this? Here's the lesson, and it's a subtle one. Bad news is good news, is real. However, right up until it isn't. When the economy softens, the Fed eases, and easier money lifts stocks. That mechanism is genuine, and it powered today's rally, but it rests on a knife's edge. The market that cheers a month when the economy lost jobs is betting the Fed rides to the rescue before the weakness turns into something worse. There's a line between the economy that's cooling, which is rate cut fuel, and the one that's stalling, which is growth scare, no rate cut, that the no rate cut can paper over. This morning's number nudged us closer to that second line. The market chose to see it as cooling. The honest answer is we don't know yet. And the pretending to know is exactly how people get hurt. So, what am I watching for next week? Three things. First, earnings season is basically over. Most of the big names have reported at this point. We will still see earnings out until September, but most of the big boys that would move the markets have reported. The market has to stand on its own 2 feet, and no blockbuster reports are going to be there to lean on. The last big tech names report next week. Cisco on Tuesday, Applied Materials on Thursday, and it's quiet until the retailers later in the month. What does the rally hold? A 1 day surge on a rate cut hope is one thing. Following through next week without a fresh catalyst is another. And third, the tell that matters most, watch the beaten down corners. Banks and staples lagged today because lower rates squeezed them. If the rest of the market is genuinely healthy, money should broaden back out. It isn't, if instead it keeps crowding into the same handful of winners, that narrowness is a warning. Cooling or stalling next week, we're going to get more clues on this. So, what did we learn today as a summary for this week? Bad news is good until it isn't. Confidence, kind of medium at this point. We're not bullish, we're not bearish, we're just in the middle. Risk level, however, is elevated because these things with some of these numbers, double digit 20, 15 to 20% moves in a single day in a stock. That tells you a couple things. One, it's the middle of summer. Volumes are really low at this time. You tend to not see a lot of volume in the markets, but that means that things get magnified more, and you've got to be prepared for that. You've got to kind of steel yourself for the moves that are happening in the markets now. So, what is the summary for this week? Bad news is good news until it isn't. Confidence, we're at a medium right now. It's not bullish, it's not bearish. We're just in the middle, and I think we're just going to be in the middle for a little bit here. Risk level, however, is elevated. You are seeing this with many of these big names that can move 10, 15, 20% in a day. That's a good year on the upside and a bad year on the downside, and you're seeing stocks move that rapidly. The Friday's jobs report, was it cooling or stalling? We just don't know. So what we'll look for next week is those last couple big name earnings. And then we're just going to have to see how the market reacts to everything. They'll stop worrying about earnings and they'll start worrying about something else. And always in the background with all of this is the Iran situation. We're hearing from the government that it's moving in the right direction and they're willing to work with us, but it sounds like they want something completely different where Iran controls the Straits of Hormuz along with Oman and then charges tolls, which that is pre-February 5th. There was nothing like that in place. So Iran thinks that they've got a strength position here as a result of that. So even if they make a decision, who knows? And that could move the market when there's nothing else to catalyze it. So we'll see you guys here back next week. I hope this has been helpful for you this week and the last couple weeks. And I look forward to reporting back to you every single day. So thanks a lot, and we'll see you back here next week.